Well, shares of Tesla are climbing despite the company reporting its global electric vehicle deliveries came in below expectations. Tesla reported around 384,000 vehicle deliveries in the second quarter. That was down about 14% from a year ago, and it was the second straight quarterly decline. Let's find out how investors think about this in terms of the stock market. Joining us now is Ivana Delevska, founder and CEO at Spear Invest. Ivana, thanks a lot for joining us. What's your view on Tesla? A very controversial stock in the marketplace for a number of topics, and one of them is valuation. Where do you come down on the valuation question here?
Well, thanks for having me, Paul. Interestingly for us, valuation really isn't an issue here, because as the company is rolling out these robo-taxis, we expect to see pretty significant upside to the numbers looking 5 to 10 years out. The real problem here is regulatory support, right? Because in order for you to make real money on the robo-taxis, they need to be available and allowed to operate across the United States, basically nationwide, without restrictions. And without the regulatory support, the pace of scaling is going to be significantly affected. So this is why we exited our position and took some profit rather than sticking with it. We still see a lot of upside in the stock, but there is also a lot of risk associated with it, and there are better risk rewards in our space.
What leads you to believe that regulators will be very stringent here and perhaps prevent or delay the rollout of these taxis?
I mean, the main reason here comes down to Elon Musk's relationship with the U.S. president. So that's really the crux of the issue. Prior to the recent incidents, we were under the belief that Elon Musk is going to have pretty significant support, not just for Tesla and autonomy, but across the businesses, because they do align both on the administration's agenda as well as his agenda, so they were pretty well aligned. With the recent controversy, we are not as convinced that he's going to have the support. So it really, like, the valuation going back really does matter whether these vehicles scale in the next 4 years or in the next 10 years, right? And that's really what makes and breaks the buy argument here. And same with the risk support, right? If there is an issue with a robotaxi with a recent launch, if you had the regulatory support, you have something to fall back on, versus without that support, if there is an issue, the rest of the technology space is going to keep going while Tesla will be held back.
Where do you see more attractive opportunities within technology?
So, Paul, within our universe, the data center trade really got hard hit in the first half of this year. Even though NVIDIA now is back to highs, the rest of the data center value chain is not. There are many stocks that are 30-40% below where they were trading at the beginning of the year. And some of them are actually trading close to where they were even prior to the AI boom. So we see a lot of opportunities here across the value chain. Companies like Astera Labs, AMD is another example. We think they're really going to benefit as the demand broadens from just NVIDIA chips to other alternatives.
Okay, talk to us a bit more in detail about those stocks. We have a chart of Astera Labs on our screen right now. Viewers can see the hit that the stock took in the early portion of this year from January until early April. It's rallied since early April, but not like a lot of stocks have. Tell us why you continue to like Astera Labs.
Yep. Also, we've been really adding on this pullback because Astera Labs is very uniquely positioned as a supplier to NVIDIA, but also to other players. So in the past, NVIDIA was their main customers. Right now, their customer base is really broadening out to the rest of the players. So we see both expansion of their product portfolio as well as expansion of their customer base. The stock really got hard hit because it was a favorite among active investors, and active investors haven't come back to the table. It's really been more retail that's driven this leg up. We think as people start focusing back on fundamentals and get more comfortable with tariffs and the macro, these are the type of stocks that investors are going to have to get back on. And we disclose all of our holdings on our website. A lot of them are around the same theme and play that people will have to come back to strong fundamental stocks.
Okay, talk to us about AMD, another giant of the space.
So Paul, AMD launched a competitive product to NVIDIA about 2.5 years ago, and they basically gained a lot of traction initially, but they weren't able to scale as quickly as people expected. Now we're seeing in this next phase of growth a lot more interest in their product and a much more broader interest. So customers like Microsoft and Amazon, which are basically the main buyers of these chips, are really coming back to them and trying to use them more, both internally but also for their customers. So we think they're going to be able to show a much more traction in the next 6 to 12 months that they were able to show in the past year. So this is another one that we added back on this pullback.
Okay, and we are running short on time, but before we go, tell us about why you like Marvell technology.
So Marvell Technology is a networking play, very similar thesis to AMD and Astera Labs. They play in the data center value chain, and it's another one where people are very skeptical about Amazon and Microsoft now launching their own chips. We think that as the pie grows, there is going to be space for everybody. There's going to be space for NVIDIA. There's going to be space for AMD, as well as custom chips, which is where Marvell plays. So we think that investors are kind of trading one for the other, but really there is upside that is much more broader here, as long as you're comfortable with the valuations.